Private debt means the direct origination of loans from non-bank investors to corporates or also individual projects, for example, in the area of infrastructure or real estate financing. The asset class has grown very strongly since the global financial crisis because banks were pulling back more and more from those sort of financings, and institutional investors have started to fill the gap more and more to provide credit to mid-market companies or projects in need of financing. Allianz has been one of the largest investors in private debt globally. We started to invest in the asset class 15 years back, and we've grown the portfolio since then. Today we are managing 35 billion in the asset class. First of all, private debt is not disconnected from public markets. So the strong increase in interest rates that we have observed in 2022 also has direct implications for our asset class. However, there's a couple of characteristics that allow private debt to deal well with those challenges. For example, most of our portfolio is floating rate in nature, so this means when base rates are increasing, the returns of our asset class are automatically going up as well. Second, a very important factor of private credit is to build in strong downside protection in transactions. Why is this important? The reason why it is important is that you can then also, when there is challenges around a project or a company, step in early on, restructure a transaction if that is needed, and this eventually leads to better outcomes. Lastly, private debt is long-term in nature, and this is a very important aspect of the asset class because we are never forced to liquidate during times of turmoil in markets, and therefore we can achieve better outcomes by holding on to our assets, restructuring and figuring things out over an extended period of time. Lastly, the question is, what will happen with loss rates in private credit? This is the most important question that we are currently facing. Our view is that if you have structured portfolios well, with strong downside protection built in, the asset class will do better than what we have historically observed in public markets, and we should eventually achieve lower loss rates. Private credit as an asset class has grown very strongly since the global financial crisis. What we are currently observing is a normalization of that growth. However, in the long term, our belief is that private credit will continue to grow strongly, and what traditionally used to be done on bank balance sheets will move more and more to the portfolios of institutional investors. Also, the current market environment with lots of uncertainty is also not all bad for private credit, because typically in those situations private credit can step in for other financing sources that are quickly disappearing, and therefore what we are observing in new transactions is better pricing and much better downside protection built into transactions. We have massive financing needs in the area of energy transition, and we believe that private credit should play an important role here because private credit finances individual companies, individual projects, and can therefore also focus on the right companies that play a positive role in the energy transition. Second, we have observed strong growth in the US first and then also in European markets, and we believe that private credit will further expand. For example, we are currently seeing growing private credit markets in Asian markets. Lastly, given the growth that we had the last couple of years, there's also more and more of a need for a secondary market in private credit, and we as a large institutional investors are playing an important role in that part of the market as well.